Wall Street eked out a gain on Monday after falling into negative territory late in the session, with persistent worries over inflation offsetting some of the morning optimism on easing regulatory crackdowns and health restrictions in China. The Dow closed up fractionally while the S&P 500 and Nasdaq ended a bit higher. Greg Swenson is founding partner of Brigg McAdam.
Once again, I think the market's looking at interest rates and potentially more inflation. We have this, the CPI number comes out later this week, so I think all eyes are on that. And when you had a nice rally this morning, it looks like, but once the investors started looking at interest rates and the 10-year ticked above 3%, I think that caused some selling. So I think it's just a tug of war between short-term good news, which we got out of China, ending the lockdowns, and that's sort of a near-term optimistic that'll help the market. But I think in the long run, the market's still concerned about inflation. That's not going away anytime soon.
Investors are keeping a close eye on inflation data, with a U.S. Consumer Price Index report on Friday expected to show inflation that's still too high. Shares of Amazon rose 2% on the stock's first day of trading after adjusting to a 20-for-1 split. Twitter shares slipped but recovered much of the losses after billionaire Elon Musk said he might walk away from his buyout offer if the social media company fails to provide him with the spam and fake account data he desires. And shares of DD Global surged more than 24% after a report that Chinese regulators were preparing as early as this week to allow the ride-hailing firm's mobile app back on domestic app stores.